Market bounces off support on Friday. What does that mean for markets now? This is what you need to know before the bell. At the beginning of February, we wrote an article talking about the correction had begun in the market, and that was because we had triggered sell signals on both of our primary indicators, and that led to the sell-off that we had to the 200-day moving average, which was our initial target that we had laid out back at the beginning of February. We said that support, which had been resistance of every rally over the last year, that had to hold, otherwise markets were going to retest lows. And if the market could hold that support, well, we might have confirmation the bulls do have control of the markets. Well, that is exactly what happened on Thursday and Friday. On Thursdays, the market touched the 200-day moving average, rallied off of that. That rally continued very nicely on Friday, rallying all the way to the 20-day moving average, which is now the first level of resistance for this rally. Now, before you get too excited, the upside for this rally is likely fairly limited, so we want to be a little bit cautious right now. That's because if we go back and look at our previous buy signals, which occurred back in both June of last year and then, of course, in October, those buy signals occurred at very low levels on both our MACD and our money flow indicator, suggesting that markets were oversold enough to have a fairly substantial rally, and we did. We had about 10% rallies in both conditions from those extreme oversold levels. The problem with the current rally, and again, very likely to have a rally here, is that the signal is now triggering at a very high level on both indicators. And that suggests that just as we saw the rally from December to February, that was a 2-month rally, and it wasn't nearly to the magnitude that we saw in these previous rallies when we had a deep oversold condition. This signal is starting to trigger at a level higher than the signal that we had back in December, suggesting that this rally may also be somewhat limited, probably to around 4,200, 4,250. That will probably be the extent of this rally, possibly a little bit more. We'll see it when we get there. But the deep oversold conditions across the board are starting to reverse, suggesting this rally does have some legs, as well as that confirmation of this bullish trend with that successful retest of the 200-day moving average breakout is now also supportive of higher prices in the near term. So trade this rally carefully right now. We have the employment report on Friday and the Fed later this month. Of course, those are going to be the big drivers from the markets, as well as the CPI report. So trade this rally carefully. It is in a bullish trend, but we'll just be paying attention to these signals because they're at a very high level. I'm your host, Lance Roberts, and that's what you need to know before the bell.